Welcome back, everyone. As many of you know, as many of you joined at that time, last year in December, November, late in the year, I made a Uranium 2020 primer series. This year, I have much less to talk about because, frankly, much of last year's are still relevant. But there were a few things that I wanted to go through looking at next year for uranium. And today I decided to make a bit of a prequel to what I had planned because I didn't plan on this move. So this prequel, part one, will be talking about the December move and is it too late and different things like that. So the first thing I wanted to say about the recent price move in a lot of the equities is it doesn't really change much. It doesn't mean the thesis is right. Still may be wrong, who knows? It doesn't change the fundamentals in and of itself, although I do think we are getting to the point where it becomes less feasible to fade the sentiment because it's possible that the fundamentals can change the sentiment, but I've spoken about that before. But the move in the equities, the move in the prices of the stocks doesn't change anything. Just if you're looking at an entry point or if you're holding and you're not sure about or you're wondering what's going to happen, changes the risk reward. But aside from that, same thing. Now, when I say that the move in the equities doesn't change anything, I mean the fact that the equities have moved hasn't changed anything. And that's not to say nothing has changed at all, because after the move, I mean, interestingly, as the moves turned into a consolidation, really, there was a bit of a fundamental shift, and that is Cameco shutting down Cigar Lake again. So what this means, again, is that Cameco will be buying more in the spot market, and it affects their partners as well, particularly Orano, who owns 37% of Cigar Lake and will thus be losing 130,000 pounds a week. That's something, especially considering that it's probably not the greatest time for Orano to be impacted with their production for a number of reasons. But this hit should, hit across the industry. Not a crippling blow and not an immediate blow, but slowly it should build up on the pressure that's already in the market. And this brings us to the real question of the matter, which is how long will Cigar Lake remain shut? Now, in the press release, they said over the coming weeks. However, the more I think about it, the more I talk with people who provide some input, some people that have bright ideas, it seems like it's probably going to be more than just a few weeks. First of all, the holidays is coming up. Next, when we look at going forward, okay, they won't want to bring it up and shut it down again. But you don't want to have to shut down a mine a third time in a year. That's, for starters, a bad look. For second of all, it's, not ideal. So how long will it be? I really don't know. It would surprise me if it is less than a month. At this point, so less than a month would take us to approximately the middle of January. So if it's less than that, it would be surprising. There's a case for 2 months. There's a case for 3. I don't know. For now, when I look at what I'm assuming, what I'm baking into my assumptions, I baked in 2 weeks, even though now I'm thinking a month is probably right. But I prefer to have my estimates be on the conservative side. And I say this because I really think that if this stays down into, let's call it the middle of February, so 2 months total, things may be interesting at that point in terms of, I don't know how the spot market is doing getting to there, and then at that point it becomes pretty questionable. But again, we don't know how long cigar remains down, and it does basically double the progress of the working down the inventory process. One day becomes two. So, every day that it's down is 2 good days. So the other question that I've seen-ish recently is it too late? Different forms of, should I buy now? Should I wait for a pullback? Is this the new reality? Stuff like that. And, well, that's a great question. But is it too late? I certainly hope not. But it all depends on how sure you are, but more so on what are you expecting or thinking is going to happen in the cycle, because that can greatly impact the answer to this question, which I don't have. I have guesses, but I do not have the answer at this point. So what I'll start by saying is I don't know what you're expecting. If people are thinking the price will go to $50 and that's it, that's the cycle, then there may be some names that are undervalued out there, but there are may be other names that are, well, frankly, expensive based on that assumption. Now, if you think it's going to 65, then probably there's more good ideas out there, and there's some that could do quite well. If you think you're highly convinced the price is going to 90 plus, well, then I'll say buy everything not nailed to the ground, even though I may not exactly mean it, because when you're looking at $90, $100, a lot of these questionable projects start looking very interesting. So if you're thinking that the price is going very high, then there's an honest strategy out there, which may be to essentially buy garbage. Because there's a point where that type of thing will outperform because it is priced like it will never be worth anything, as opposed to the quality that's already priced like it's probably worth something big someday. So the point is, expectations can factor in big time to, well, how you would answer the question today. So how far will we go? It still depends. I have ideas, I have targets. It's not the place to go into every possibility here, but it's too soon to know where we go. But I do firmly believe that we will go higher, and that many stocks will benefit from that, even if they don't reach whoever's eventual target goal. The other point that you need to consider when considering the is it too late question is, what is your investment time frame? Because some people ask questions or ask my opinion on things, and what they're asking me about is essentially day trading. And I'm not the person you want to ask about that. I don't day trade. I think there's a lot of it that seems very random to me. Sometimes there's something where I'll think about making a call, or I'll see something that I'll like, but most of the time I find it very random. And so if you're looking at from a long-term fundamental perspective, you're trying to gauge that, and then you're trying to day trade around it, what I say means nothing, literally nothing. And it's kind of similar for week to week, or even month to month, because a lot can happen in a week, a lot can happen in a month. There can be very vicious pullbacks, there could be a whole bunch of things can happen, and realistically, You can't always catch it. I can't always catch it. Maybe some of you can. So do we see a big pull? Like, if there is a pullback, is it a big pullback? Is it a small pullback? Is it a negligible pullback? Or does it not happen at all? I don't know. And so when people sometimes ask me, basically, buy now, wait for a pullback, I don't even know how to start answering. The reason why I try and buy and hold and wait, and by buy and hold, I do not mean hold forever, because the only mining stocks you want to hold forever are the ones that got bought out, and that's it. But the reason I buy and hold longer term is because I'm not that good. I don't think I have the ability to basically either time the market or know when to ride the market to its entirety. And if I did, if I thought it was predictable in a way where I can buy at the right time and just hold till the end and then sell, well, then I probably wouldn't be buying early and sitting and waiting through the risk and the pain at the beginning. Now, to follow up on a few points that I made at various stages of this video, there are a lot of ways to make a profit in a bull market. But I think it's important to recognize that most of the companies, most of the uranium companies, will not go into production, will not become profitable in this cycle, or will for a very brief period of time. But that's not to say that you can't do quite well with ones that don't. And I'm trying to be careful here because I don't want to sound like some of my least favorite CEOs. But so the point comes down to know what you own and know how that company would make money and what it is waiting for. Because when I look at all of these companies, most investments really, I look in terms of probability. If you own something that's probably really bad, but could be amazing, it might still be worth owning. Or you can buy something that's great, but could be a bit better. And I mean, there's different risk rewards there. So, like, sometimes you're targeting a 10 bagger, sometimes you're targeting a 3 bagger. It just, but again, if everyone agrees something is great, that's something you're paying for. Versus if everyone thinks something is terrible, you might be able to get it really cheap. And if it's not absolutely worthless, it could do quite well, could do even better. So back to what I'm saying of know what you own, know why you own it, know how it benefits, because when the price goes up or down, the whole sector kind of inflates or deflates with the price. So don't get necessarily caught waiting for something to go into production because the price is going up, or to make money, or some things will. But if you look back at the last cycle, you can see spots where a company that was bought out for $1 billion, even though it hasn't made any money since. And I predict that, again, $1 billion or more will be wasted in the sector. I have no control over how it gets wasted, but as of right now, the fundamentals are pointing, I believe, in a direction that will take the sector to a point where money will be wasted. And then, once all the money's wasted, I believe that, the fundamentals will point to a spot where you probably don't want to be long anymore. But for now, the fundamentals are, I believe, pointing up. So again, the only mining stocks that you want to hold forever are, well, none. So that's really all I wanted to say with regards to this December move that we've had. I will say that the sector fundamentals still have a long road ahead, and I think that many of the equities, if bought even at these prices, still have, if things go well or all right, may have significant moves ahead. But the equities get harder and harder to predict or to acknowledge as good buys as the price moves. I do believe we are still early, so there's still, I believe, plenty of upside ahead. Maybe more in the right picks, maybe less in the wrong picks, maybe more in the wrong picks. I mean, it's look, you're going to find me more and more reluctant to talk about the equities the higher the price goes. But one thing I'll say for now is that I don't think that because a stock has gone up that it necessarily means that you shouldn't buy it, or because a stock has been down means that you should, or vice versa either. Because I look at the different options out there, and there are some laggards that I like, some laggards I don't, some ones that are up a lot that I like, and even then I don't have all the answers. So don't necessarily say, oh, it's run up too much, because maybe it's just a really good stock, or the reverse, maybe it's gone up too much. Both cases are true sometimes. Anyway, that's all for today. Thanks for watching, everyone. Hope you enjoyed. Until next time, have a great day.